Very, very good morning to all of you, my friends. Welcome back. I hope you guys are doing good, and further, I hope that you guys are prepared for this session. In the previous session, we discussed the concepts of standard costing, wherein we discussed variety of questions on standard costing. So today, now we are starting with marginal costing. Again, a very important chapter from examination point of view. So before starting with the session, I just want to know, do anyone have any doubts or queries or any concepts you guys want me to discuss? Any particular concept or question, if you guys want me to discuss, you can speak to me. Yes, Kushi, Arun, anyone with any doubts or queries? Mehak, Pooja, Gayatri, anyone with any doubts or queries relating to any concept or question? You are prepared for this session, Gayatri? Okay, so fine. Let's start with marginal costing. So in the first half an hour, 45 minutes, I'll just give you a few brush up about few concepts of marginal costing, and then we will start discussing few questions. This is a session on marginal costing, Mehak. So let's start with this chapter, marginal costing. I'll cover the basic concepts first of all. Now again, this chapter, marginal costing, has nothing to do with cost calculation. It's a part of management accounting and it assists management in decision making. Further, before starting with this chapter, I'm discussing few concepts that are related to this chapter. The first concept is marginal cost. That is the cost of manufacturing additional unit. Suppose if we are manufacturing 100 unit and the cost is 1000. So if we manufacture one extra unit, the cost will be 1010. So here in 10 is rupees is what? The marginal cost. Next concept is variable cost. We generally use this marginal cost and variable cost interchangeably. When talking about variable cost, the cost that varies according to production. It's the cost that varies according to production. So if we are manufacturing 100 units, the cost is 1000. If we are manufacturing 200 units, the cost will be 2000. 500 units, the cost will be 5000. And if we are not manufacturing any units, the cost will be 0. When talking about the examples of variable cost, it's material, labor, and all the variable overheads. So when talking about this chapter, marginal costing, for the students who have joined a bit late, it's Marginal cost is the cost of manufacturing additional unit. Marginal cost and variable cost are sometimes used interchangeably. When talking about variable cost, the cost that varies according to production. Next is fixed cost. When talking about fixed cost, the cost that remain fixed, the cost that remain fixed irrespective of production, the cost that remain fixed irrespective of production. Let's say we are manufacturing 1000 units and the cost is 1 lakh. If we manufacture 5000 units also, the cost will be 1 lakh. And if we manufacture 0 units also, the cost will be 1 lakh. When talking about the examples, it can be rent, salary. So variable cost is the cost that varies according to production. Fixed cost, the cost that remain fixed irrespective of production is fixed cost. Most of the companies has to shut down their business. The reason being is the headache is the fixed cost, not the variable cost. Because variable cost tabhi lagega when we are manufacturing any product. If we are not manufacturing any product, there will be no variable cost. The headache is what? The fixed cost. Most of the companies, irrespective of the production, have to pay their fixed cost. And if they are not being able to recover their fixed cost, they have to better shut down the business. So in every business, the major headache is what? The fixed cost. Now, when talking about this chapter is based on 5 terms, that is sales, minus variable cost, we will get contribution, minus fixed cost, will get profit. Let's say my sales is 200, my variable cost is 120, my contribution will be how much? 80. My fixed cost is 40, therefore my profit will be what? 40. So this chapter is based on these 5 terms, nothing more than that. These 5 terms, if you are thorough with, then you can solve any question on marginal costing. There is a difference between power and electricity, Gayatri. There is a difference between power and electricity. General electricity consumption in office is fixed cost. So sales minus variable cost, we will get contribution. Contribution minus fixed cost, will get profit. Sales minus variable cost is contribution. Contribution minus fixed cost is profit. So we can say the formula for contribution, I'm saying contribution as C. So what will be the formula for contribution? That is sales minus variable cost will be contribution. Alternatively, we can say fixed cost plus profit can also be contribution. So this chapter is dependent upon these 5 terms. Now, first point, what the examiner generally do ask. First point, what the examiner generally do ask and what you need to calculate in every question is PV ratio. Profit volume ratio. When talking about profit volume ratio, what it says, the percentage of contribution to sales. That is, what is the percentage of contribution to sales? So herein, my contribution is 80, My sales is 200 into 100. So what's the percentage of contribution to sales? 40%. It means contribution is 40% of sales. Let's say my contribution is 200 and my sales is 1000. Let's say my contribution is 200 and my sales is 1000. What will be my PV ratio? Very good, everyone. Let's say my I think those students who are not posting the answers still they are not thorough with the concepts of marginal costing or what. Rest all very good, everyone. Anyways, so the percentage of contribution to sales is what we call as PV ratio. Let's say contribution is given 1,20,000 and PV ratio is let's say 25%. Contribution is given let's say 1,20,000 and PV ratio is given 25%. What will be my sales? Yes, quick. Very good, girl. Very good, everyone. Another question. Let's say my contribution is 1,80,000. I repeat again, my contribution, everyone correct answer. Let's say my contribution is 1,80,000 and my variable cost is 70% of sales. My variable cost is 70% of sales and my contribution is 1,80,000. So what will be my sales? Very good, girl. Very good, Arun. My contribution is 1,80,000. Very good, Pooja. My contribution is 1,80,000 and my variable cost is 70%. So what will be my sales? Very good, everyone. So PV ratio, the percentage of contribution to sales is what we call as PV ratio. Now, very important, guys, PV ratio remain constant at all the level of sales. Very good, Prince. PV ratio remain constant at all the level of sales. That is, whatever the sales is, PV ratio will always remain constant. Unless and until, one second. So PV ratio remain constant at all the level of sales. However, if the question clearly specifies that there is a change in selling price per unit or variable cost per unit, yes, the PV ratio will change. So if the sales is increasing or sales is decreasing, it means we will assume that the units are increasing, decreasing. There is no change in selling price per unit or variable cost per unit. So guys, do make a note of it. Very important. PV ratio remain constant at all the level of sales. However, if a question clearly specifies about change in selling price per unit or variable cost per unit, then PV ratio will change. So PV ratio remain constant at all the level of sales. However, if a question clearly specifies about the change in selling price per unit or variable cost per unit, then only the PV ratio will change. So if the question is silent, it means PV ratio is constant at all the level of sales. Moving towards the next part. That is break-even sales. When talking about break-even sales, what is break-even sales? The level of sales where there is no profit, no loss. or we can say the level where sales is equals to total cost. The point where sales is equals to total cost. Now, when talking about break-even sales, I have explained this in the concept session also, that there are no formulas. Just like standard costing, there are, yes, we can say like that also, girl. So I have discussed in my regular class also that there are no formulas in marginal costing. It's all what concepts that are there in marginal costing. Yes, it's all what about the concepts that are there in marginal costing. So we have discussed in our regular batches that how come these formulas are derived. So the derivation of this formula is discussed in my regular batch. When talking about if you want to calculate break-even sales, it is fixed cost divided by PV ratio. Fixed cost divided by PV ratio. So let's take the same question wherein my fixed cost is 40 and my PV ratio is 40%. So it means 100 rupees is what? My break-even sales. For derivation also, I'm just explaining this. So if the sales is 100, as I mentioned, that see the sales drops from 200 to 100. So 200 is my actual sales. 200 is my actual sales and my break-even sales is only 100 rupees. Now, as I mentioned very clearly, that if there is a change in sales, there will be no change in PV ratio if the question is silent. Yes, Arun. So there is no change in PV ratio. PV ratio will be constant. So contribution will be how much? 40% of sales. So this will be 40, this will be 60. My fixed cost is 40. Fixed cost, as I discussed, remain fixed irrespective of production. So my profit will be what? So this is just for derivation. How come this formula is derived? I have discussed in my regular class. So you can check out my regular batch. This is just a quick revision of the chapter. Let's take one more question. Let's say sales is given, wherein we are manufacturing 500 units, we are selling 500 units at the rate 10, that is 5,000. My variable cost is 7 per unit, that is 3,500. So my contribution will be 1,500. Let's say my fixed cost is 900. Therefore, my profit will be 600. My contribution per unit will be 3. Now, if you want to calculate the PV ratio, it is 3 divided by 10 into 100 or 1,500 divided by 5,000 into 100. So PV ratio will be how much? Contribution divided by sales into 100. So that is 1,500 divided by 5,000 into 100. Now, if you want to calculate break-even sales in rupees, it will be 900 divided by 30%. That is fixed cost divided by PV ratio. 3,000 rupees. See, I repeat again, break-even sales in rupees, if you want to calculate it, is fixed cost divided by PV ratio. So fixed cost is 900 divided by my PV ratio 30%, so 3,000 rupees. One unit is sold for 10 rupees. One unit is sold for how much? 10 rupees. So we can say 3,000 divided by 10, it is 300 units. Very good, everyone. I request you guys, those who want to copy this part can please copy. I request you guys to copy this explanation. During exams, you can just use it for the revision purpose. So it's the master chart of marginal costing. I'll be erasing this part now. So just giving you 2 to 3 minutes time to copy everything. Only this part, I'll give you time to copy this part. This is the master chart of marginal costing. While during exams, you can just simply revise this chart, the basic concepts. Again, what I want to say is that concepts are the key. Instead of memorizing the formulas, focus on the concepts. If you are thorough with the concepts, you can solve any question. Yes, practice is required. Done, Gayatri? Now, let's say you want to calculate break-even sales in units also directly. So again, there is a formula that is given in the study material. Again, how come this formula is derived? I've already discussed in my regular class. So it is fixed cost divided by contribution per unit. So my fixed cost is 900 divided by contribution per unit is how much? 3 rupees. So it is 300. Here is also 300 units. So there are two ways to calculate break-even sales in units. So if you want to calculate it in rupees, it is fixed cost divided by, yes, Arun, sales values divided by selling price, we will get the number of units. See, how come we get the total amount? Units multiplied by price, we get the total amount. So if we divide the total amount with the price, we will get the units. I hope it is clear. Let's assume it as question number 1. Let's assume it as question number 2. Question number 1, question number 2. Now the next concept what the examiner do ask is, first one was PV ratio, second one was break-even sales. Generally, the examiner do ask about desired sales. Let's say here in this case, only in question number 1, 200 is my sales, 120 is my variable cost, my contribution is 80, my fixed cost is 40, and my profit is 40. Now, in question number 1 only, let's say the question gives that what if I want to earn a profit of 600 rupees? How much sales is required to earn a profit of 600 rupees? So let's say desired profit is given, that is 600, and they are asking us to calculate desired sales in question number 1. Desired profit is given, and they are asking how much sales is required to earn a profit of 600. So very simple. Fixed cost plus my desired profit divided by my PV ratio. So my fixed cost is how much in this case? 40 plus 600 divided by 40%. So this will be 1600 rupees. Now, how come this formula is derived? I have discussed this in my regular class. That is, earlier in break-even sales, we were supposed to recover our fixed cost. Now, apart from fixed cost, I want to recover my profit also. So that will be my total desired contribution divided by PV ratio. Now, if you want to calculate desired sales in question number 2, if you want to calculate desired sales, again, it will be what fixed cost is how much. Let's say in question number 2, desired sales you have to calculate and desired profit is given. Let's say 3,000. So again, fixed cost is 900 plus 3,000 divided by 30%. So it will be 13,000 rupees or 1,300 units. Very important, guys, if you want to calculate units in an alternate way also. So herein it was fixed cost divided by contribution per unit. So herein there will be a small change. It will be fixed cost plus desired profit divided by contribution per unit. So my fixed cost is 900. My desired profit is 3,000 divided by 3. So it will be 1,300 units. So this is all what about desired profit. So first point what you have to calculate is PV ratio. That is contribution divided by sales into 100. Then break even sales, that is fixed cost divided by PV ratio if you want to calculate it in rupees. And if you want to calculate it in units, it is fixed cost divided by contribution per unit. Next is desired sales when desired profit is given. So desired sales will be how much? That is fixed cost plus desired profit divided by PV ratio if you want to calculate it in rupees. And if you want to calculate it in units, it is fixed cost plus desired profit divided by contribution per unit. I request you guys to copy this entire explanation, giving you 2 to 3 minutes time. Now, the next point what the examiner generally do ask is margin of safety. That is how much we are safe from deadline of business. So when talking about the formula, it is actual sales minus break-even sales. That is, let's say my actual sales is 5,000 and my break-even sales is 3,000. So how much safe I am? 2,000. Alternatively, we can calculate it with the help of one more formula. Again, there are no formulas. I have discussed the concepts in detail. So it is profit divided by PV ratio. How come this formula is derived? You can check my recorded session. So this is all what about margin of safety. That is how much we are safe from deadline of business. You can calculate it as actual sales minus break-even sales or profit divided by PV ratio. So these are the basic formulas or these are the basic concepts. Again, as I mentioned previously also, there are no formulas in marginal costing, not even single formula in marginal costing. It's all what about concepts. So instead of memorizing the formula, start focusing on the concepts. Again, develop your concepts with few, graduation level books and then start approaching the questions of study material. Because if you are thorough with the concepts, you will be able to solve. See, if the question is straight, you can apply the formula. But trust me, guys, in 99% cases, marginal costing का question straight नहीं आता है. In some or other way, it's on the trickier side. So better focus on concepts rather than memorizing the formulas. Now, one more point, wherein two period figures are given. Let's say the data is given for 2025 and 2026. Wherein sales is given 1 lakh and 2 lakh. Profit is given, let's say, 30,000 and 70,000. And question can ask you to calculate the PV ratio and other figures. So if you want to calculate PV ratio, generally PV ratio is contribution divided by sales into 100, wherein we have some data related to either contribution or variable cost or sales, anything. But here no data is given related to variable cost and contribution. So if such type of questions are there, then PV ratio will be change in profit divided by change in sales into 100. So there is a change in profit of 40,000 divided by change in sales of 1 lakh into 100. So this will be 40%. Now, once the PV ratio is calculated, we can easily calculate the fixed cost. Sales is 1 lakh. Variable cost, see, 40% is what my contribution. So 60% will be my variable cost. Contribution will be 40,000. Fixed cost we don't have, but we have the profit figure, that is 30,000. So it will be 10,000. The fixed cost will also be same in 2026 also, wherein it is 2 lakh into 40%, it will be 80,000. Fixed cost remain constant, 10,000. So we have the profit, that is 70,000. So if two period figures are given, you have to solve it in this way. So we are done with this part, the basic concepts. So first point, PV ratio, contribution divided by sales into 100. Next is break-even sales. If you want to calculate it in rupees, it is fixed cost divided by PV ratio. Margin of safety will be calculated separately for 2025 and 26. So PV ratio, it is contribution divided by sales into 100. Then break-even sales, it is, if you want to calculate it in rupees, it is fixed cost divided by PV ratio. If you want to calculate it in units, it is fixed cost divided by contribution per unit. Next is desired sales, wherein desired profit is given. So fixed cost plus desired profit divided by PV ratio, if you want to calculate it in rupees. and fixed cost plus desired profit divided by contribution per unit if you want to calculate it in units. Margin of safety, that is actual sales minus break-even sales or profit divided by PV ratio. So these are the few basic concepts that are covered in marginal costing. Now let's discuss few more concepts with the help of practical problems. Due to some technical reasons, we are not been able to upload the material. So by the end of the session, it will be done. As of now, I am sharing you the screen for your reference. So you can take the screenshot and can refer the question. I'll be discussing question number 4 from my material. I request you guys to take the screenshot of question number 4 from my material. Question number 4, I'll be discussing first. So Vijay Limited makes and sell two products, V and J. The budgeted selling price of V is 1800 and that of J it is 2160. Variable cost associated with producing and selling V are 900 and that of J it is 1800. Annual fixed production and selling cost of V and J Limited are 88,000. The company has two production slash sales option. That is, V and J can be sold either in ratio of 2:3 or in ratio of 1:2. So what will be the optimal mix and why? So let's start with this question, wherein there are two types of product and fixed cost is given as a whole. So how to deal with it? So question number 4 from my material, wherein there are two products, fixed cost is given as a whole for the company, and the question is asking us to calculate the break-even sales and to check out that which mix is optimal. So herein there are two mix, either 2:3 or 1:2. I hope you guys have taken the screenshot. Yes, everyone. Done? This is question number 4. You have to take the screenshot of question number 4. Done, everyone? So let's start with this question, question number 4. So first of all, we'll be starting with a mix of 2:3 and then 1:2. I want you guys to solve in this session only. So let's start. Now see how to deal with these types of question. Selling price is given, that is 1800 and 2160. Variable cost is also given, that is 900 and 1800. My contribution per unit will be 900 and 360. And my fixed cost is given, that is 88,000. Now, let's start with a mix of 2:3. We have to figure out that which mix is optimal and why. So the mix with the highest PV ratio and low break-even point will be the best one. The mix with the highest PV ratio and low break-even point will be the suitable one. So let's start with, first of all, calculating the PV ratio. How to calculate PV ratio? So herein we will first calculate combined PV ratio. We'll calculate combined PV ratio, that is weighted average PV ratio, wherein my contribution is how much for V? 900. What is the weight? 2. For J it is 360. What is the weight? 3. Whole divided by my sales. 1800 into 2 plus 2160 into 3 multiplied by 100. So this is how the combined PV ratio will be calculated, that is contribution per unit into the quantity, or weight of the quantity, divided by selling price per unit into the weight of the quantity. So this is how the combined PV ratio will be calculated. Now, thereafter, we'll calculate the combined break-even sales also we will calculate now. Wherein again fixed cost divided by combined PV ratio. 88,000 is my fixed cost. So anyone with any doubt or queries? Yes, very good, Prince. Anyone with any doubts or queries? These types of questions examiner do ask in exams. So earlier part, what I discussed were the raw concepts. But now, when talking about the advanced concepts, these types of questions examiner do ask. So 308015. This is what the combined break-even sales. If you want to see, again, examiner, see, this is not required from the perspective of this question. But sometimes examiner can ask the individual break-even sales of both the products, that is V and J. So this is the combined break-even sales. If the question asks us to calculate the individual break-even sales of V and J, very simple, guys. It is to be distributed in the ratio of sales, not in the ratio of selling price, not in the ratio of contribution. It should be distributed in the ratio of sales, that is 1800 into 2 and 2160 into 3, because this is also what the sales. So it should be distributed in the ratio of 3600 is to 6480. So in the given case wherein the combined PV ratio is 28.57, mix is 2 is to 3, and fixed cost is 88,000. So the combined break-even sales will be 308015, and the individual break-even sales will be 1,10,005 and 1,98,010. If you want to calculate it in units, very simple. This is the what the total sales divided by price. 1,10,005 divided by price, that is 1800. We will get the break-even sales in unit also. So this will be 92 units. And this will be 1,10,005 divided by 1800. This will be 62 units. I'm just taking the rounding of figure because units can't be in fraction. Very good, Gayatri. Now next, there is an alternate way to calculate the number of units also. There is an alternate way and a straight way to calculate the number of units also. That is, we have to calculate the weighted average contribution per unit. So see, my contribution is 900 into 2 plus 360 into 3. 900 into 2, 360 into 3 divided by 2 plus 3. This will be 576. Now, we'll get the break-even sales in units also. That is 88,000 is the total fixed cost divided by 576 units. Sorry, 576 is the contribution per unit. So this will be 153. Have to be distributed in the ratio of 2 is to 3. So this will be 62 units. And this will be 91 units. So the difference is because of the rounding off. So if you want to calculate break-even sales in rupees, it is See, herein we have calculated the combined PV ratio. For break-even sales in unit, we have to calculate the weighted average contribution per unit. So this 153 unit is what the combined break-even sales in units. And it is to be distributed, since it is units only, so it will be distributed in the weight of the units only, that is 2:3. So here is very important. The first point, we have to calculate the combined PV ratio, combined break-even sales, and individual break-even sales. If you want to calculate it in units, instead of this, we have to calculate, instead of combined PV ratio, we have to calculate the weighted average contribution per unit. Then we will get the total break-even sales and it will need to be distributed. So this is the way to solve the question if there are two or more than two products. Anyone with any doubts or queries? Yes, Prince, Pooja, Gayatri, Garv, Mehak, Jignesh, any doubts? Yes, Arun, Khushi, any doubts? Pooja, do you guys want me to discuss anything in this question? Yes. If you guys want me to explain this again also, I can. I just want you guys to be thorough with these concepts. These questions examiner do ask quite frequently. I repeat again, when two types of products are given and fixed cost is given as a whole. So the first thing what we have to calculate is PV ratio, that is combined PV ratio, combined break-even sales, individual break-even sales. The question is over. But if you want to calculate it in units, then no need to calculate combined PV ratio. Instead of combined PV ratio, we will calculate the weighted average contribution per unit, break-even sales in units, and then it is to be distributed. So since there are no queries from your end, I want you guys to post the answer. What if the ratio is 1:2? You have to post combined break-even sales in rupees and in units. Next, break-even sales of V and J in rupees and in units. And combined PV ratio also. One, two, three, four, five, six, seven. I want these answers now. Quick. Giving you 5 minutes time. I want you guys to solve this question. So very good, Gayatri. Very good, Arun. Your answers are matching, and I think it is correct. Your units are not matching, Arun and Gayatri. Yes, I've got answers from Gayatri and Arun. Rest all waiting for your answers. Very good, Mehak. What about the individual one? So combined PV ratio, it is 26.47. Combined break-even sales also, I think everybody's answer is matching. Prince Nayak, please recheck your answer. What is the combined break-even point in units? Now waiting for these answers from everyone. So very good, everyone. Correct answers. Very good. Units can't be in decimals. Rest all appreciate your efforts. Arun, Gayatri, Mehak, Prince, Kushi Gupta. Very good. Very good, everyone. That's okay, Prince. No worries. So anyone want to copy this explanation can please copy, giving you 2 minutes time. $540 is the weighted average contribution per unit, Mehak. It's the weighted average contribution per unit 540. Then now you have to calculate break-even point in units, and then you need to distribute in the ratio of 1:2, Mehak. Yes, Arun, tell me. Yes, Arun.
Sir, while calculating the unit, actually I divided mm, okay sales in term of the BP point divided by contribution, but I am getting different answer.
I'm not getting what you're saying, Arun.
Sir,
Can you
first I figure
more
out
loud?
the BP in term of sales, and I divided from the contribution combined contribution
Which one?
amount.
This part you are talking about 1:2 wala?
Not sir, not that one, sir. Middle one,
This
sir.
one.
BP in term of units.
Okay, break even point in terms of units for 1:2
Yes,
or
sir.
for 2:3 you are asking?
Sir, actually, what I did means I figure out the BEP in term of sales.
Okay, BP in terms of sales. So what is your break even point in terms of sales?
Sir, first 3 lakh, sir, BEP sales is around 3 lakh 32,000 451.
Yes, perfect. Now this need to be distributed in the ratio of sales, that is 1800 into 1 and 2160 into 2.
Sir, but instead of doing that directly, divided by the combined contribution amount.
No, 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 you can't do this. How can you divide it by contribution amount with the break even sales? If you need to distribute among these two, this is the way you have to follow. That is 308015. It is to be distributed in the ratio of sales. That is 1800 into 2 and 2160 into 3.
Sir, but while we calculating a single product, that time we will do same.
There is a difference, dear.
Okay, okay, sir, got it.
Yeah. Anyone else with any doubts or queries? Let's discuss one more question relating to shutdown point. I want you guys to take screenshot of question number 3. I request you guys to take screenshot of question number 3. This is question number 3. A paint manufacturing company manufactured 2 lakh per annum medium-sized tins. I request you guys to please take the screenshot of question number 3. So let's start with question number 3, wherein a paint manufacturing company manufactures 2 lakh per annum medium-sized tins of royal paint. When working at normal capacity, it incurs the following cost of manufacturing per unit. That is, direct material is 7.8, direct labor is 2.1, variable overheads are 2.5, fixed overheads are 4, production cost per unit is 16.40. Each unit of the product is sold for 21 with a variable selling and administration expenses of 60 paisa per tin. During the next quarter, only 10,000 units can be produced and sold. Management plan to shut down the plant, estimating that the fixed manufacturing cost can be reduced to 74,000 for this quarter. When the plant is operating, the fixed overheads are incurred at a uniform rate throughout the year. Additional cost of plant shutdown for the quarter are estimated at rupees 14,000. To express your opinion along with the calculation as to whether the plant should be shut down during the quarter, and second point, to calculate the shutdown point for the quarter in units of products, that is in terms of number of tins. So herein the purpose of discussing this question is basically discussing the concepts of shutdown point. Again, whatever the variety of questions you discuss, again focus on the concepts. So that's why I'm just taking in this class, I'm just taking all the revision question concepts, so that at least you can have a quick idea about what all concepts are covered in this chapter. So anyways, let's start with question number 3. The question is related to shutdown point. So let's start with the statement. We have the selling price, that is 21. Direct material is 7.8. direct labor, variable overheads, next is variable selling and administration expenses are 0.60 paisa. So we'll get the total variable cost. So now we have calculated the contribution per unit. Now see, herein when talking about the fixed cost, it is given that the company manufactured 2 lakh per annum medium sized tins and the fixed overheads are rupees 4 per unit. So what will be the total fixed cost for the year? 2 lakh into 4. Now for 1 quarter, that is for 3 months, it will be into 3 divided by 12. So my fixed cost will be 2 lakh rupees. I'm just writing down the data that is given in the question. Now, herein they are saying that during the next quarter, only 10,000 units can be produced and sold, and management plan to shut down the plant, estimating that the fixed manufacturing cost can be reduced to 74,000 for the quarter. When the plant is operating, the fixed overheads are incurred at a uniform rate throughout the year. Additional cost of plant shutdown for the quarter are 14,000. So see now, very important, if the plant is shut down, what will be my fixed cost? See, it's given in the question, management plan to shut down the plant, estimating that the fixed manufacturing cost can be reduced to 74,000. Now see, if the plant is shut down, fixed cost will be how much? 74,000. Additional cost of shutting down, so it is the total shutdown cost. So if the plant is shut down, it means what? We will make a loss of 88,000. Now herein in this quarter, they are saying that only 10,000 units can be manufactured and sold. So if plant is operating, then how much will be my loss? See, 10,000 units can be manufactured and sold, and the contribution is how much? 8 rupees. So this will be what? My contribution. That is 80,000. Minus my fixed cost. If the plant is operating, my fixed cost will be how much? 2 lakh rupees. So how much will be my loss? So very important, guys. Now see, if we shut down the plant, there is a loss of 88,000. If we continue with the plant, there is a loss of 1,20,000. So better will be what? To shut down the plant. So better I repeat again, if the plant is operating during the quarter, that is for the 3 months, there will be a loss of 1,20,000. However, if we shut down the plant, there will be a loss of 88,000, or we can say there is a fixed cost of 88,000. So it's still, if we shut down also, there is a saving in loss. If we continue, 1,20,000 loss. If we discontinue, 88,000 loss. So better to shut down the plant. Now the next point is they are asking us to calculate. They are asking us to calculate the shutdown point. Do anyone have any idea what will be the shutdown point? Can anyone tell me what will be the shutdown point? The point where we are indifferent that whether to continue or not to continue, the loss will be the same. Again, see, don't go with the formulas. Understand, if we see when they are saying that shutdown point, what do you mean by shutdown point? The point where we are indifferent that to continue or discontinue, the loss will be the same. आप प्लांट चालू रखें या बंद करें, लॉस विल बी द सेम. So can you guys tell me what is the shutdown point? Again, don't refer the formulas, Mehak. Very good, everyone. No, it's not correct. Shutdown point means no profit, no loss. It's not correct. The point where we are indifferent that if we continue also or discontinue also, the loss will be the same. So see, if we continue, the loss is 1,20,000, and if we discontinue, the loss is what? 88,000. Yes. So if we continue and we are making a loss of 88,000, it means we are at indifference point. See, this is what my desired loss if we continue. 88,000 is anyways we are going to suffer. So what's the contribution we should earn that there is a loss of 88,000? So very simple. In simple terms, we can say my desired loss is how much? If we continue also, my desired loss is 88,000. My fixed cost, if we continue, it will be 2 lakh. So what will be my contribution? 1,12,000. So if we are making a contribution of 1,12,000, it means we are indifferent. If we continue also, there is a loss of 88,000. If we discontinue also, there is a loss of 88,000. So 1,12,000 divided by 8, 1,12,000 is my contribution divided by 8. So 14,000 is what? My shutdown point. That is the point where if we continue also, the loss will be the same. If we discontinue also, the loss will be the same. So in short, now we can easily frame the formula, that is total fixed cost minus shutdown cost divided by contribution per unit. So what's the formula? Total fixed cost minus shutdown cost. So 2 lakh minus 88,000 divided by 8, we will get the final answer. Anyone with any doubts or queries? I request you guys to copy the solution, please, giving you 2 minutes time. Again, instead of going with the formulas, focus on the concepts. Concepts are the key. So just giving you 2 minutes time. So now, let's start with question number 2. Let's start with question number 2. This question I want you guys to solve. It's a very easy question and it's from past examination also. So I request you guys to read question number 2 and try to solve it. I'm just reading and discussing this question orally for your reference, wherein an umbrella manufacturer makes an average net profit of 2 rupees 50 paisa per piece on a selling price of 14 rupees 30 paisa by producing and selling 60,000 pieces, that is 60% of the potential capacity. His cost of sales in is direct material, it will be 3.5, direct labor, it will be 1.25, work overheads are 6.25, that is 50% fixed and 50% variable. Selling overheads are 0.8, that is 25% variable. Now, during the current year, he intends to produce the same number of units, but anticipates that his fixed charges will go up by 10%, while the rate of direct labor and direct material will go up by 8% and 6% respectively. But he has no option of increasing the selling price under this situation. He obtains an offer for further 20% of his capacity. So what minimum price will you recommend for acceptance of offer to ensure that the manufacturer earn an overall profit of 1,67,300? I request you guys to attempt this question. It's a very good question. Sometimes examiner do ask these types of question relating to a special order. So we have to fix up the price for a special order or for a special case. So I have solved half of the question now. I have taken 60,000. Always remember. So I request you guys to post your answer that what price we will quote for 20,000 units. What is the price we will quote for 20,000 units? To earn a profit of 167,300. Waiting for your answers. Very good, Gayatri. You have to quote the price, not the total amount. You have to quote the price, that what price will be quoting for 20,000 units. Incorrect answer. Yes, anyone else ready with the answer? Yes, Kushi, Prince, Pooja, Mehak. See, my desired overall profit is incorrect answer, Mehak. My desired overall profit is 1,67,300. Now, my profit from current capacity. My contribution is how much? Minus fixed cost from the current production, 245,850. So this will be 109050. See, my current desired profit is 167,300. So profit from current capacity of 60,000 pieces, the contribution is this much, the minus fixed cost. So this is the profit I'm getting from current capacity. Desired profit from order will be how much? 58,250. My profit from expected from the order is how much? 58,250. Very good, Mac. Kushi Gupta, answer is incorrect. Prince Nayak, answer is incorrect. So this is the profit desired from order. So profit per piece will be how much? Desired profit per piece how much? 58,250 divided by 20,000 pieces. This is the profit I expect from 20,000 pieces. That is 2.9125 is the profit I expect from every piece. And to manufacture every piece, what is my cost? 8.385. Because my fixed cost is already recovered from my current capacity. Again, fixed costs remain constant irrespective of production. So, manufacturing cost is how much? This is what my desired selling price. So this is the way you guys have to solve the question. Anyone with any doubts or queries? See, I repeat again, this is my variable cost, this is my contribution, this is my fixed cost. Desired profit is 167,300. So profit from the current capacity is 109050. It means this much is already recovered from 60,000 pieces. So this amount I want from balance to 20,000 pieces. So that is 2.9125 is what the per piece I want. Now herein, when talking about the manufacturing cost will be only 8.385, no fixed cost, because fixed cost is fixed irrespective of production. So material, all the variable overheads will be 8.385. So this is the selling price I want minimum for 20,000 pieces. I request you guys to copy the solution. I'm done with the explanation. So enough of discussion on this question. Those who want to copy the explanation can please copy. Now let's take a break of 15 minutes. I'll be back after 15 minutes with the concept of key factor, wherein the examiner do ask questions on key factor also quite frequently. Admin sir, let's take a break. Welcome back, friends. Aditi Gupta, sir, can you please explain once more? Aditi, see, this is a marginal costing class. I have to finish certain part. So the question is related to material costing. So Aditi, what you do is just drop in a mail na cma-inter@icai.in cma-inter@icai.in. I'll address your query immediately. Don't worry, Aditi. Just give me 1 second, friends. So Aditi, just drop me your query cma-inter@icai.in along with your along with the screenshot of the question. I'll be there to address your query personally. Don't worry, Aditi. So, anyways, guys, let's proceed further with marginal costing. Now, the last part for today's session, that is key factor. So, let's start with key factor or limiting factor now. I'll be covering all the points in this part, that what all is covered in key factor or limiting factor. So let's say we are manufacturing three types of product, X, Y, and Z. I'm discussing this concept with the help of a random example. So do pay attention. Many students find difficulty in key factor or limiting factor. So I'm manufacturing three types of product, X, Y, and Z. Let's say the selling price is 100 rupees, 100 rupees, and 100 rupees for all the three products. Variable cost is 60, 70, and 80. Therefore, my contribution will be 40, 30, and 20. Now, let's say all these three products are manufactured with a special kind of raw material. And now, due to certain reasons, the raw material availability is very limited. Let's say my annual requirement is of 1 lakh kgs. However, the available raw material in the market is only 60,000 kgs. I have available raw material only 60,000 kgs. My raw material available is how much? Even though my requirement is of 1 lakh kgs, but my raw material, my supplier said that I'm able to provide only 60,000 kgs of raw material. This much I have. So you have to manage and you have to adjust it accordingly. And this material is provided by that supplier only. No one else is providing such kind of raw material. Now herein, my raw material is very limited in quantity. Even though my requirement is of 1 lakh, however, it is available only 60,000 kgs. So we can say there is a scarcity of raw material. So herein, what will be my object? My object will be to utilize this 60,000 kgs in such a way so that I can get the maximum profit out of it. So herein, see, the resource that are available in a very limited quantity, that resource is what we call as the key factor or limiting factor. So वो resource, be it labor hours, be it machine hours, be it raw material, जो हमारे पास बहुत limited availability है, तो वो resource जो है वो हमारा क्या हो जाता है, key factor और limiting factor. So my object will be to utilize the raw material in such a way so that I can get the maximum profit out of it. Now herein some additional information is given in the question. Let's say raw material required per unit. So herein let's say 10 kgs is required. Four kg is required. My raw material is in a very limited quantity. No, Arun, because the raw material is very important. See, again, if we are getting a highest contribution, the raw material usage is more, then what to do? So my object will be what? See, since raw material is the limiting factor, since raw material is the key factor, therefore, our object will be to utilize raw material in such a way that we can get maximum profit. So again, the contribution is important, but the usage of raw material is also very important. So can anyone advise me which product we should manufacture so that we will get the highest profit? Waiting for your answers. Which product we should manufacture so that we can get the highest profit, X, Y, or Z? Yes, Mehak, Pooja, waiting for your answers. Avjeet, Arun, Khushi. Very good, everyone. Your answers are correct. So here in C, we are using 10 kgs and we are getting a contribution of 40. So how much contribution we are getting per kg? 4 rupees. Herein how much contribution we are getting per kg? 6 rupees. And herein how much contribution we are getting? 5 rupees. So since raw material is the limiting factor, so a decision will be based on contribution per kg of raw material. So if we have unlimited demand for all the products, then we'll be manufacturing product Y only. But if there is any limited demand, then the second priority will be given to Z and third priority will be given to X. So first priority will be given to Y, second priority will be given to Z, and third priority will be given to X because the contribution per kg is lowest. Now let's take various situations. There is unlimited demand of all the products. If there is unlimited demand of all the products, then we will manufacture product Y only. Since contribution per kg is highest. So how many units will be manufactured? 60,000 kgs we have. One unit require 5 kgs. So 12,000 units we will manufacture. And my contribution will be how much? 12,000 into 30. So this is the first case when there is unlimited demand for all the product. Now let's take out a second situation wherein maximum demand is also given. Let's say of a particular product, we can manufacture at the most 5,000 pieces. Of a particular product, we can manufacture at the most 5,000 units only. So when maximum demand is given, so no worries, we will first fulfill the demand of product Y. So we have raw material 60,000 kgs because first we will manufacture product Y. Full 5,000 units into 5 kgs. So 25,000 kgs are gone to manufacture product Y. That is 5,000 into 5. Still we have 35,000 kgs in our hand. Thereafter we'll manufacture product Z. Again, 5 4s are 20. We have sufficient raw material with us. So 5,000 into 4. Still we have 15,000. Now let's say when talking about X, we need 50,000 kgs. Do we have 50,000 kgs? No, we have only 15,000 kgs. So 15,000 divided by 10, only 1,500 units of product X will be manufactured. 1,500 into 10. So to calculate the contribution, it's easy for us to calculate the contribution now. X 1,500 into 40. Y 5,000 into 30. And Z the total contribution will be 3,10,000. Very good, Arun. Now moving towards the third part. Wherein minimum demand is also given. 50, let's say 2,000 units. That is, the minimum demand is also given for all the products. So let's take the third situation where maximum and minimum demand is raw material we have is 60,000 kgs. So we will first fulfill the minimum demand of all the three products, that is 2000 into 10 plus 2000 into 5 plus 2000 into 4. So 20,000 used in this, 10, 30 and 38,000. So 38,000 is gone to fulfill the minimum demand. Still we have 22,000 kgs in hand. Still we have 22,000 kgs in hand. So now these 22,000 kgs will be first utilized to manufacture product Y. So see, out of 5,000, 2,000 units are already manufactured. So 3,000 units can be manufactured or not. 3,000 into 5, 15,000. And herein the material is 22,000. So full 2,000 units will be manufactured. So product Y balance 3,000 units into 5. Still we have 7,000 kgs with us. So product Y full 10,000 units are manufactured. Sorry, product Y full 5,000 units are manufactured. Now moving towards product Z. If we manufacture full 3,000 units, so we need 12,000 kgs. Do we have 12,000 kgs? No. We have only 7,000 kgs. So 7,000 divided by 4. At the most, 1,750 units can be manufactured. So whenever you find a question when there is minimum plus maximum demand, no answer will be different. So wherein minimum plus maximum demand are given, let's first fulfill the minimum demand and then check out that balance demand can be fulfilled or not for the products which are on the top priority. So now contribution we can calculate. For X, Y and Z, X 2000 units at the rate 40, Y 5,000 units at the rate 30, and Z 3750. 2000 from the minimum and 750 from the maximum. So the contribution will be 3,05,000. So this is the way you guys have to deal the various situation. So if unlimited demand, then manufacture the product with the highest contribution per kg of raw material. When the maximum demand is given, first fulfill the first priority, followed by second, then third. If maximum minimum demand both are given, then first fulfill the minimum demand and then start with the product which is given the first priority. This is the way. Apart from this, okay, I request you guys to copy this explanation, especially then I'll give you time to copy. See, herein in this question, raw material is the key factor. So since raw material is the key factor, that is, therefore, our object will be to utilize the raw material in such a way so that we can get the maximum profit. I request you guys to copy this explanation. Just this part, please. In this question, we have scarcity of raw material. So my key factor or limiting factor is raw material. So herein my object will be to utilize the raw material in such a way so that I can get the maximum profit out of it. So whatever I'm saying, I have just written it so that you can understand it in a better way and you will write. And always remember, what you will write, you will remember it forever. So just do copy this part, that why I'm doing all this exercise. So herein, since my raw material was my key factor, so my entire decision that which product I should manufacture was dependent upon contribution per kg of raw material. So entire decision was based on contribution per kg of raw material. So if my key factor was raw material, so decision will be based on contribution per kg of raw material. Let's say if my labor hours are my key factor. If there is a very limited supply of labor, if labor hours are my key factor, it will be contribution decision will be based on. So herein we will be placing labor hours per unit and we'll be calculating contribution per labor hour. My basis of decision will be contribution per labor hour. If my machine hours is my key factor, my decision will be based on contribution per machine hour. If my sales value is my limiting factor, that is maximum permissible sales is 1 crore due to some or other reasons or taxation purpose or whatever it is. If the sales value is my limiting factor, my decision will be based on the product with the highest PV ratio. If the sales value is my limiting factor or key factor, my decision will be based on PV ratio. If sales in units, that is, we cannot sell more than such number of units. Rest, there is no scarcity of resources. Only the sales in units is my limiting factor. Then again, my decision will be based on contribution per unit. So the product with the highest contribution per unit should be manufactured and sold. So this is all what about discussion on key factor or limiting factor. Anyone with any doubts or queries? If the production capacity is limited, it means what? Limited in what sense? Due to available raw material or due to available machine hours or due to available labor hours? You tell me. A cross question from my end. Why the production capacity is limited? The problem is what? Yes, I don't know your name. It's not available. production capacity, why it is limited. Some or other hints will be given in the question that why there is a limited production capacity. If nothing is given, either PV ratio or contribution per unit will be the basis of decision. Do share me the question. Some information will always be given in the question. CMA-inter@ICAI.in. CMA-inter@ICAI.in. Just drop me a mail along with that attachment. I'll just speak to you personally. Don't worry. So this is all what about key factor, giving you 2 minutes time to copy this explanation. This part covers the entire key factor. Everything is covered. And apart from this, in my last revisionary class, I have discussed a question: what if in case there are two key factors? So this question I want you guys to refer rest. If you are done with all these things, and apart from this, the study material, my material, no one can stop you from getting good marks in, especially in marginal costing. So this much is more than sufficient in marginal costing. Study material plus the material what I have provided. Apart from this, RTP, MTP, that is more than sufficient. So giving you 2 minutes time to copy this explanation. One of the faculty will be taking revision for budget, Gayatri. So guys, today is my last class. A tip from my side: do try to solve the questions in writing. This is the best way and the best approach for your studies. Again, when talking about costing, it's all what about concepts. There are no formulas in cost accounting. I have taken many batches on costing on ICAI platform. So if you're finding any sort of difficulty related to the chapters I have discussed, starting from material costing, then I have discussed overheads also, activity-based costing, then process costing, joint by product costing, marginal, standard, process costing, service costing. I have taken almost all the chapters apart from few chapters. So if you want, you can check my recorded session of the previous batches also. Everything is available over the platform. And if you find any sort of difficulty in the chapters what I have discussed, just write a mail to cma-inter@icai.in. Be it any conceptual query, be it any query related to any of the questions that are there in the material or MTP or RTP. I'm there till the last date of your exams. Further, as I told you guys also, there is no alternate of hard work. So try to solve questions in writing. It will help you to improve the concepts also and develop the speed also, because apart from concept, speed is also very important in costing. Because what I have seen is that many students are not being able to complete their paper. In fact, they are able to complete only 75% or 80% of their paper. So the problem is the lack of speed and lack of practice. So practice, practice, and practice is the key. And apart from this, focus on concepts. That is the key. Thank you so much, guys, for your time and patience and for active participation in the session. I tried my best to cover wherever required the concepts, wherever required some good questions. Still, if anything is left out, just drop in a mail. I'm there. I'll immediately address all your queries. So thank you so much, guys. Wish you good luck for your exams. God bless you. Take care. Thank you so much. Admin sir, I'm done. Yes, 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 yes. Ajit sir.